Bon matin.
Hello everybody, welcome to my channel. Today we'll be talking about Alpha Protech. This is a company producing PPE and N95 masks, and this analysis is based on Q1 2020. The ticker is APT and the share price at the moment is $10. So let's dive in. As usual, I will present you the different earning results, so income statement, balance sheet, cash flow statement, give you a summary and also some outlook for the next quarters. Basically, quickly on the technical, this is the chart since early this year. As you can see, it's been trading very low, and because of the pandemic, COVID-19 pandemic, and the need for N95 masks, the company has been like rocketing up to $40, and this was probably like the trading part, and then basically it stabilized between like a channel between, let's say, $9 and $18. At the moment it's at its lowest. That's why I'm making this video, because I believe this could be a very good entry point. Also, for your information, the float, the short float percentage actually is quite high, 26%, meaning that if there's any positive news in the next quarters, there's going to be a possibility for a short squeeze. Now let's look into the income statement and basically to see what happened over the last quarters when the company, let's say, reported very good results. And basically the gross margin has been impacted from 35 to 47%. This is the last quarter, and the net income obviously followed because there's a good operating leverage in this company. Here you can see the revenue. So basically, on a quarter basis, the company is usually making between $11 and $12 million of revenue, but over the last quarters, because there was like a lot of demand for this mask and face shields, the company has been having a very good revenue. This also boosted the net income from less than $1 million up to $4 million. Now the question is going to be obviously if the company can sustain this revenue and what does it mean in terms of free cash flow generation. As you can see here also, this is the OPEX split, so basically the same the last 4 quarters. You can see that the net income, the net margin actually has been up to 24% for the last quarter. So that's the income statement. Now let's switch to the balance sheet. Here I present you also a dynamic view of the last 4 quarters, and basically the colored tick is basically the last quarter. As you can see here, basically the current liabilities has been increasing from, let's say, 2 million to 11 million, but obviously the cash also has been increasing from 7 to $18 million, which is really good. Based on this, you can calculate the total current assets, which is here the sum of all the pink elements, and it is 42 million. And if you subtract this with the current liabilities, this is how you get the working capital of $31 million. Basically, this will be important to have in mind to calculate the enterprise value later. Also, an important point that we need to look at is the long-term debt. And the company has been basically having almost no long-term debt, which makes it like a very good balance sheet. Now let's look at the cash flow statements. Here I extracted in this table the last 4 years from the last 10 Ks, and basically I grouped them into the 3 different segments: operating cash flow, investing cash flow, and financing cash flow. What we really need to look at is basically at the operating cash flow to ensure that it's positive over years. And that's why I'm making this table, basically summarizing exactly what you can see here on the table, and you have a better idea of how the company has been performing since 2016. Over the last 4 years, basically the company has been generating positive operating cash flow, and thanks to this, because the capex is very low, actually you can see here capex is around, let's say, maybe $1 million per year. because they generate so much cash, they can spend it on the financing parts. You have different ways to invest, let's say, into the to spend your money on the financing side. Else you can pay dividends, you can pay back a debt if you have, but obviously APT doesn't have any debt at the moment. So the last option that APT is opting is what they call retirement of stocks, so which means buyback. So this is what I summarize here on this little table here. Over the last 4 years, they bought back around 16% of the shares. The last element here that you can see here is based on Q1. So it's 3 months trailing, and basically the company has been generating almost $9 million of operating cash flow just in the first quarter. So this is just massive. So that's important to see if it's going to follow up or not into this direction. But I will speak about it a bit later. Here is the DNA card. So basically, all the values that I was showing you just before, I summarized them into this table to make this basically the most important calculation for me when I make like an estimation of what is the yield return of a company. And basically, it's just the free cash flow generated divided by the enterprise value. It's a bit much better than the reverse of a PE ratio. That's why I'm using this to take into account, for example, long-term debt, long-term investment, the working capital, and also the capex. So based on this, on the last 4 quarters, this is here where I see like the earning over the last 4 quarters was $6 million. And the enterprise value is estimated at 102 million. This is based, of course, based on a share price of $10. If the share price changed, obviously the enterprise value also changed. But what is very interesting is if you look at the numbers based on the last quarters, because they generated so much earning, if I just consider this calculation based on the last quarter, the yield return is just amazing, almost 17% today. And this is what actually I'm very interested in too, is basically at this stage, there are very, very, very few companies that can propose you such a yield return. Now let's look at the price ratios. So this section, and basically what is important to look at is the EV to sales. It can give you a very, very good indication of if a company is undervalued or overvalued. EV to sales of 2, considering such good margins, okay, based on the last quarter, it's quite, let's say, undervalued. That's why I consider that this company at the moment, just based on the last quarter, so that's a very good quarter, they are a little bit undervalued. Regarding the growth, so this table is actually interesting in terms of how much the company grew over the last 3 years. And basically it was like very, very stable, 1% increase over the last 4 years. And the OPEX even grew even a little bit more. That's the reason why this company has not been in favor in terms of share price, because the company basically is stagnant. However, based on the last quarter, same, it changed everything, and basically if the company is continuing at least on the same pace, the revenue will grow 56% year over year. So now that's the question. Can we just rely on the last quarter and just decide to invest based on this number, or do we just consider that it was just like a one quarter apart, and that we will fall back into this type of yield return, which is like quite standard, 6%. You can find that in many, many companies. So that's what we are looking here. When you look at the last 10Q, so the last, let's say, quarterly report, this is where you can find interesting information, and especially the company, because they see so much demand on these N95 masks and face shields. They're basically considering expanding their production facilities. And this is what you can see here on phase 1. They plan to ramp the production in 2 different phases. The first phase that's going to be basically completed end of May, so we can potentially have an impact on Q3. And the phase 2, which is announced to be finished by late summer, which possibly will have an impact on Q4. Now the question is how much this ramp-up will be in terms of revenue. And that's actually what you can find also in the 10Q. They mention, let's say, some paragraphs regarding the N95 mask and also the face shield. And basically, they speak about booking. So basically, for example, for N95 mask, the booking from January 27 to May 1st was declared as $46 million. But in Q1, they only did $3.7 million in N95 masks. What does it mean? It means that $43 million booking for N95 are still to be produced. But you can see that 8% of this booking will be produced by 2021, which means that 92% of the booking will be completed by 2020. What does it mean? It means that basically N95 production are expected to be around $40 million. If we do the same exercise for the face shield, you can see that the 2020 bookings will be in total for the next 3 quarters, $10 million. So when you add these 39.6 plus $10.3 million, you can expect the company to produce over the next 3 quarters around $50 million in terms of revenue. Considering that there will be a phase 1 and phase 2 expansion, it's not going to be, let's say, split into equally into the 3 quarters. So you will have possibly, this is an assumption that I'm making here, and nothing, let's say, really official. It's just an interpretation of the 10Q, which will give me Q2 $10 million, Q3 $15 million, and Q4 $25 million, just for N95 mask and face shield. Be aware that the company is also producing PPE for the building supply, for the building industry, and other type of PPE which are contributing to additional revenue. But basically, this is the pace that the feeling that I'd like to share with you is basically that based on the last 10Q, you can expect to have at least as good numbers as the Q1 or even better, considering this ramp up of phase 1 and phase 2 if they are completed. Obviously, on the conclusion, first, that's what I want to say, like it's basically a solid balance sheet. They generate a lot of cash flow that they used to do, that they used for buyback. They have also a high booking for 2020 already, which is like is securing at least good numbers for the next quarters. Also, they have this phase 1 and 2 expansion planned for very soon, so which I mentioned already secures more revenue. Also, the demand will continue, obviously, even if the crisis is over. Why? Because basically the N95 masks at the moment are very difficult to buy because there's no stock. So first they need to replenish the inventory in United States. But also now that the government knows that it can happen, it will be for sure asking for inventory in case of an additional pandemic in the future. So it means that probably this, let's say, increased production will last even over the next coming years. Also, the production is mostly in US, so it's facilitating a lot the supply for the country. You don't let's say, rely on another country. And also, recently, the China masks that don't have exactly the same, let's say, regulation. Actually, it's not N95 mask in China, it's NK95. And basically, over the last weeks, the US has mentioned that they would prefer to have, let's say, mostly local made masks because they can rely, they know they have a better efficiency, basically, at this 95% filtration. So basically, they didn't trust the Chinese mask, and that's why it will benefit the local companies like Alpha Protec to secure their revenue. Now, the only cons that I can identify would be possibly a further competition. Of course, Alpha Protec is not the only company to produce this type of PPE. And because maybe an increase of production will happen over the other companies, there might be some price pressure and obviously a gross margin reduction. So I think that's it. But based on this DNA card, so I go back to the DNA card. I think this is quite an interesting bet, especially for such type of yield return, which means like if you translate this into a PE number, it would be definitely a PE of like around 7, something like this. So a PE of 7 with a company with no debt and a secured revenue might be a very interesting, let's say, company to invest in. Of course, I'm not a financial advisor, so just consider this as just pure entertainment. And I leave you to make your own research before you do any purchase. Okay, I hope you enjoyed, and then I see you on the next episode for a new company. If you have any comments regarding this company or any other, just let me know in the comments. Thank you, bye bye, have a nice weekend.